What's up, investors? Simon here. In this video, we're going to go ahead and talk about the S&P 500 being down over 20% this year alone and how many people are losing out on their 401k. I feel bad for those that have their 401k due for payout. So we're going to get into this video and talk about what's going on. Before I do, like the video, subscribe to the channel if you haven't done so already. It's free, guys. I appreciate it. Let's get into this video. Okay, so a lot of people are pulling their stocks out and putting more money into bonds or something that's more secure. More stocks have been sold in September than August and July, and we've seen the market really crash and bottom out. Investors are tired of seeing continuous losses, and I don't think it's going to get any better anytime soon. And the majority of trades from the 401k have went from equities to fixed income. And every time there's a huge dip in Wall Street, people take their money out from stocks and they move it into bonds. It's safer, it's a little bit less risky. And again, people are tired of seeing those losses in the stock market. Money market funds in September garnered 15% inflows. That was the money coming out of people's stocks, and bonds went up or got 2% of that influx. So overall, if you're in the stock market, you're panicking, especially if you put your money in about 6-7 months ago. Personally, I held off. I knew a crash was happening. I kept that money out, and now I'm waiting for a bottom to jump back in or maybe jump back into real estate. And 50% of the money from those 401ks was traded or came out of target date funds. And many are still sticking with the 60-40 stock split, 60% of their money in stocks, 40% in bonds. But even that strategy, which is proven to be effective over the course of decades, has actually cost investors quite a big dip. Mind you, even though there's a 20% dip, the market or the S&P is still up in the past 5 years. With the S&P being up 42% in the past 5 years if you had invested, which is pretty good. So if you put in about 100 grand, you'd come out with $142,000. And that's a pretty decent investment in a 5-year gain. In the last month, the S&P 500 has been down 11% or so. And in the year, it's down nearly 18 or 20%, with 6 months coming in at about 17%. So overall, the S&P 500 has been notoriously a great investment vehicle. And since it was tracked, or according to Google, just before 1988, the S&P 500 is up 2,624% overall to date from 1988. That is a great return. It looks like something of a cryptocurrency number. So that's pretty good on your investment. So I would not worry about it in terms of what's happening today. Now, the S&P 500 is going to go ahead and turn around. If you are continuously investing into it, I would probably wait, check with your advisors. I'm not one. However, I'm waiting personally for the market to bottom out. I don't think it has yet. And if you're also sticking with the 60-40 portfolio with bonds and stocks, many financial analysts still recommend that portfolio to keep an even balance. And those financial advisors, according to many of these websites that I read, caution against switching these strategies because it could actually lead to bigger losses. So if you wake up in the morning and you decide to cash out, be wary because you're selling at a low point. Probably want to ride it out. You don't sell stocks at the bottom and you don't buy stocks at the top. That's the famous saying. You may want to invest in different asset classes, and you may also want to diverge your portfolio into commodities such as oil and gold. Those have seen an increase with the stock market really getting pummeled. I've made some videos on the stock market with some of the most basic stocks that we've seen continuously rising, including Meta or Facebook, Google, Apple, or Alphabet, I should say. We've seen electric car manufacturers crash, cryptocurrency companies such as Coinbase go down. So it's been a rough ride for anyone that's relying on the stock market as an investment vehicle. My strategy for the stock market currently is wait it out, see what's happening. I'm not going to make any drastic moves. I'm not going to move things out of my 401k. I'm playing the long-term goal. And as I mentioned earlier in the video, the S&P 500 is due to go up year over year or decade over decade, and it has gone up a lot since the beginning or since Google's tracking it. So overall, we're going to probably see an increase higher. So you have to ride the wave out. It's a tsunami that we have to live through. So unfortunately, that's going to continue to bottom out, in my opinion, with the war still waging in Russia, lack of gas supplies all over the world, a crazy recession and inflation, or a stagflation happening all over the world, where the cost of goods, food, and everything is rising, yet there's a recession-like loom all over the place. So it's worldwide. It's going to affect everything, the supply chains as well. China's GDP is predicted to not increase where it has been in the past. So they actually may have a negative GDP for the first time this coming year. And that is scary because they're the world producer of things. I think they've also are now feeling the effects of total shutdowns, etc. Overall, I feel like we are now experiencing the ripple effects of what we've done in 2020 and what has led into 2021, and then some bad policies that have come out since. So overall, everything is crashing, from luxury goods to real estate markets to used car prices to you name it, and it's going to be like this for a while. So hang tight. If you're an investor, you are probably excited because this is a great time to buy up and invest. Stocks like Ring, which was at $430. So Ring Central is going for about $40, which is crazy. So overall, these are stocks that you could consider buying that are going to go up in price. Snap has gone down to like $14 or something like this, or $10. I think it was at $18 before. Then it went up to $90 or so dollars, or $80. Rivian, which is an electric car maker, has gone up to very high peaks, and all of a sudden it's down 70 or so percent. Coinbase has gone down so much. There are so many companies that you could potentially investigate with your financial advisor and see which is the best one to put money in. I personally am waiting on one. If you can recommend one below, I'll do my research on it as well. Anyway, I hope you enjoyed this video. If you did, give me a like for the video, subscribe to the channel. I appreciate it. I'll check you guys here in the next video.